Hello everyone, welcome back to the channel. Today we're going to discuss about a question, can I buy a home in the USA on a H1B visa? So the short answer for this is yes. Not a non-immigrant visa holder can purchase a property in US. There are no direct immigration status based restrictions on property ownership in the USA. So as long as you have money and the SSN number, you can purchase a property because those are the main thing that requires to owning a property. I also heard a B1 and B2 visa holders can purchase property in US, but they would have challenges on securing SSN number. Maybe they can obtain a TIN number, but then they have to secure a mortgage. That's a bank loan. So there are some challenges for that, which I would think it can be more difficult compared to other visa categories like TN, L1, F1, and H1B. So let's discuss about more in detail on what are the challenges and what are the pros and cons of owning a home here and tips and some smart decisions going forward. So before you jump into buying a home in USA on being on a H1B visa, you're presently working in USA and being in USA for some time. Some risk factors are involved. The important things that you should consider carefully before moving forward. So as you know, so employment status is a very big important factor when you're purchasing a home. So your current employment situation. So if you work for a company and they are very stable and you have a secure job that you can be around for quite some time, for maybe next 5 years or so, then you're good. And the next thing would be a visa status. Let's say you are in US probably a year or two. So most likely on H1B, you can get your H1B visa as long as 6 years without green card. But if your company files a green card process, and then you can extend your visa as long as you want um, based on your green card petition. So that's the next thing. So your visa status is very important. And the long-term goals of being in the USA. So long-term don't necessarily need to be your lifetime. It can be a next 5 years or can be a 10 years. It depends. Depends on your life status and situation. And altogether on the top, it's going to be a financial circumstance. So are you ready to get into buying a home? Because it's a commitment. It's not something come for cheap. It can be a heavy investment of everyone's life, pretty much. Buying a home is a big investment. To recap this sections, this is a very risk factor things that you are going to keep in mind. Current employment status, how is that good or going to last for next 5 years? It's totally you need to come up with um, a measurement on that. Only you are the best judge for that. Some things you can say, some things you cannot, because companies these days they can now terminate employment anytime. Visa status and employment status, they both are interconnected. So sometime if you lose your job, you only have a grace period of a month or two, maybe 60 days or something like that to secure other job. If you do that, you're good. If not, probably you will lose your visa. So you have to get out of the country. So that's another risk factor. And if you're able to secure this too, it's going to be a long-term goal of at least staying in one place or in a house for at least maybe 5 years. That's just a recommendation. Since you're going to, I believe you're going to obtain a loan, bank loan, which is a mortgage, and it would require at least be stable in your home for at least 5 years to balance all the numbers. And the last one is financial circumstance, like you're making enough money for paying your mortgage and taking care of your personal needs and so on. Okay, so those are the risk factors. Let's move to the next one. So let's talk about the pros of buying a home. You can consider this as a financial investment. So purchasing a home is a significant financial investment that can provide a long-term benefits, such as potential value of appreciation if you live in the home for maybe 5 years or so, or maybe more than that. That due to inflation, due to the development of the area around it, could appreciate over time, and that would improve your property value. So when you sell, or if you're leaving the country, you want to go back to your country, that time it might appreciate, and you may get some gain, or you might balance out because you are paying mortgage. So you might even the cost means like you might end up living for free in that house for probably, maybe 3 years or 5 years. It depends on the calculation of your house and location and the amount you sell and the appreciation. There are a lot of various things involved in that. So it can even out. Possibilities are you won't really make a lot of money. You would just even out, I would say. And the next point, pro, will be stability and belonging. So, owning a home can provide a sense of stability and belonging. So, you might feel like now you have a home for your family. You can always, feel great about it and owning your own home and like to do things, gardening or changing things, whatever you like in the home because you're spending money for yourself for living. Probably you can't do all these things in an apartment. Most likely, I know you can only do what you're allowed to do in the apartments when you live there. So you're owning a house is something a different experience. The other point to think about from pros point of view is you could avoid fluctuating rent payments. So rental are subject to change when your lease is up for renewal. So let's say you have a 12 months lease, and when you go for once you're done with 12 months, when you're up for renewal, and probably that time they would rate the rent based on the market value. During that time, if the rents are up, probably your rent will go up. Probably it can be 50 or $100, or maybe even more. Depends on the location and demand. So you may end up paying that rent, or you have to just leave the apartment so that they will rent it for someone else. So that fluctuation is something you would keep looking every time when the renewal is up. So that's something you can don't need to worry about when you're in a mortgage or you bought a home with full cash. You don't have to worry about that one because you're totally out of it. You only have a stable payment for maybe 30 years, next 30 years, like monthly payment is like $3,000. On an average, I would say 2,500 to $3,000. It will not change any up or down. It might a little bit, I would say. It will not change a lot because the reason I would say a little bit is your tax, your county tax goes up, your monthly payment can get affected, or your other expenses. But it won't be a lot of fluctuation like rent. The next one is an appreciating asset. Owning a home in US, which has one of the world's strongest economy, can be a valuable asset. So it's a good thing. So if you have your home in the right location and at the right time at the right market, it would really hold a value so that it'll be easy for you probably to make a gain out of it, or it might help you to find a job nearby home because if you have multiple jobs in main area, so you can just stay in that place and you can keep switching around the jobs, and that also will help in appreciating because you have an asset in a right location. So that's another pro. Additional income, the last option. This is a very last option, I would say. It's not something an easy option. Um, it requires certain amount of work that you need to pick right people to do certain things. The additional thing is like, let's say if you have to leave the country for whatever reason, right? Could be a visa, loss of job, or your family requirement. You have to go back to your country to take care of something. In that case, you could rent out the property using a property management companies. There are many property management company. You have to pick a right one, and they might charge you a certain percentage, maybe 10 or 15% of the rent, and then you are responsible for all the maintenance and all the, things they are doing it. It'll be charged pretty much. They might have a maintenance folks. They will do it and all these things. So this is, you might consider this as an additional income if everything goes fine. But again, if you cannot come to US and manage your property, then it can be a little bit challenging. In that case, you probably it's better to sell it. Or if you really want to rent it out, you at some point you have to sell this property, right? So that time you may have to request for a B1, B2 visa, apply for a visa, and then you have to say that why you're coming here because you have a property, you have to sell it. So that's the reason you're coming in for probably 6 months time. You can ask for a visa. People do get a visa for that because it's a valid ask. You have to liquidate your asset. You could liquidate that and take care of whatever that is, including tax and paperwork, all the stuff, and then you can go back to your country. So, yes, that is not always the case. If you have a green card and if you want to rent it out and you are back and forth, or you're going to a different, maybe a different state, or you're going to be in your country for probably 6 months or so, then you'll be coming back. Maybe in that case, it might be doable. So, but owning a home here and no one is taking care of it and you're staying away, it's actually not going to work very well. So it could actually damage your home or lose, you will not know. So these are some of the pros that I can think of. Let me know if you see any other pros. Please do add a comment below. Others can learn from it. So the cons. Obviously, you all know that uncertainty of visa status. So H1B visa holders, actually, obtaining H1B itself is really tough thing because it's like, somebody have to sponsor you, then you have to go for H1B lottery and then get selected and then start your job. And then after 3 years, you might go for an extension and then you have to go for an auto fee. All those headaches are there. And after all, you do all those things. Some mortgage companies do not offer you mortgage because you're on visa, but most of them don't. They would provide, but they will ask you for a visa status and your passport information. So if they have a reasonable amount of duration, they would provide you a mortgage. But if you have only 6 months, and then probabilities are the mortgage companies will think that you are not going to be here for longer, and the chances of getting an approval for your mortgage can be tough. And if you lose your visa, probably you can't work. If you can't work, you can't make money, and then if you don't make money, you can't make mortgage payments. So it's going to be a mess. So keep in mind, visa, work, money, all three things are interconnected. So that's totally uncertainty, which is in USCIS hand. You cannot tell them to extend your visa because you own a property. That's not how it works. Next option is a limited loan option. I think I discussed about this in the previous point, but this I'm going to reiterate this since we are going to be discussing about the cons here. So people on H1B, we won't have a lot of options in mortgages. So probably we only have conventional mortgage, jumbo and FHA loan. There are first-time home buyers programs are there. You if you that you have to make a less of certain, like 70,000 or something below. That numbers do change. You have to check, but most visa holders are above that. Means like that's one of the LCA requirement, labor certificate requirement, that you have to your company have to pay more than certain numbers, even for you to qualify to become a H1B visa holder. So in that case, it's going to offset your some of that federal program that first-time home buyers might qualify because they have been making less money, but that's not necessarily going to work for H1B because I've seen, I've gone through those things. So it's not going to work. It's just going to be a total waste of time. But if you find a way to get that worked out, it's great. But in my research, it didn't fly well. So the much easier is conventional mortgage. Make sure that you have enough room in your visa, and they will ask for your passport, visa information before they approve your mortgage because they give a pre-approval, and then when it really they're going to release the loan, that time they will ask you all the details. If it's not going to be given clearly, probably they will deny the mortgage. So that's another con. The last one is, yeah, potential need of leaving USA. You never know how things would turn out. You may have to just leave USA for whatever reason, so you never know. Um, so that for your family reason, or you don't have to, you don't like to be here, whatever, whatnot. Most likely, most people do that due to a family requirement. So that time you need to find out some. So that time you need to come up with contingency plan. Um, like what if things like this come? So you may have to hire a property management company, or you may have to find your friend or a family members who live in US would like to assist you with the situation while things can be straightened out. So yeah, those these are complicated. It's not something very straightforward because asking someone to take care of your home where they live in a different state altogether, so it's not really going to fly very well because of the distance and difficulty with individual lifestyles. So those are the cons of owning property. The next one, which I would like to talk, is like smart choice. So let's say you decided to go, you think that you straightened your visa, you'll stay with your company, you're doing great, you're one of the key player in the company, making good money, your visa is in good shape because your company has started your green card process. Perfect. No, or you are smart, great talent background, you're going on a EB1, you got a green card, and it's totally you're fine, that state. But now you are still in the green card process, and the employment based, then you need to make some smart decisions because you secured the three things: visa, employment, money, finance. So these three are you're secured. You desire to make a choice of buying a home. Smart choices. So how do you do that? So first, now make sure that your credit score is at least 650 and above. The reason I'm giving little higher number, I would even still recommend 700 because why I say that? Because when you shop around for mortgage with the different lenders or banks or financial institutes, they would do a credit check. So those checks are hard check. You could lose 10, 20, or 30 points. I don't know. It depends on individuals' credit background, and it varies. I know there is a window of probably 50 to 100 days, I believe. If you go with it, if you shop around in this period to different lenders, they would make a hard check on your credit history, and your points will not fluctuate a lot. It only get hit like 20 points or something. I would just pick a number 20 points or 30 points, and it'll stay like that for that. So if you want to shop around, do it like within that 1 month period. No, I would say like that. So shop talk shop talk, like five different quotes you're getting from five different mortgage. So that way you don't screw up your credit score too much. And then too much inquiries on your credit history is also not a great thing because no, you need to be answerable. When you're going to close your house, they would ask you, what is this? And whoever is lending you, you need to provide an explanation. You can say that, yeah, I was shopping around. So they would be asking you what these hard checks are and did you borrow money from? You have to provide a honest explanation. You have to sign it, sign a paper. You can simply say that I was shopping around. That's totally fine. But if you borrowed money and if you're not telling that to the lender, it can be considered as a forgery. So you can be penalized for that. So you got to be very careful. So the next one would be go to the rent versus buying calculator. Just Google it for rent versus buying calculator. Start filling the information there, and it will give you a number. And if the number should be, it should even out, means like it should tally, or it should be the buying number should be lower compared to renting. Only then it makes sense to buy. Otherwise, renting is more cheaper. So that'll give you a number. It'll give you a recommendation based on all the expenses and stuff. Purchasing an affordable home for living is the next point, I would say, because buy something for your need, not buy because of social pressure. Maybe your friend have bought a 10-bedroom home, you only have three people in your home. Why would you need that big? Probably you just need a three-bedroom home. That's the max, like less than 2,000 square foot. Because the bigger the square foot, the bigger you would have to pay in every single way. Your mortgage will be higher, the property will price will be higher, interest, cooling, heating, maintenance, everything will be more. So you would be simply paying money just for empty rooms that you're not using. But no, don't do that. So buy something that is you wanted for your needs and you will use them effectively. Do not get something big that you don't use it, right? Buy it for your use, not buy something that you don't use. And then the next point is save enough money to make a down payment. So when you purchase a home, you have to put some money down. And so that's how it works. So you have to make sure you have at least 20%. You can still buy a home with 5% down, but it's going to increase your monthly payments because you will still your interest will be high for the remaining amount, like 95% of the rest of the money comes from the lender, so you have to pay interest on the top of it. And then most of the time, the lenders would do something called PMI, private mortgage insurance. And that means you're only putting 5% and they are putting 95% of money. So that means they are a little bit in a insecure place. So to secure the loan, they would ask you to pay for PMI. They will charge you. The PMI can be around $200 a month on an average. So which is just a waste of money altogether in a year. Like 2,400 is like too much. You can put the 2,400 into your principal. That'll even minimize your home interest. So in short, put at least 20% down. Otherwise, uh, see if there is any way you can avoid PMI. If you get some great offer, somebody is giving ready to lend you money without PMI, great, take it. But I would always put at least 20% or more. The more you put, the less interest you pay, the less monthly payments it'll bring down to. And select a mortgage that has no penalty or prepayment or early closure. Means like you got to just ask the lender, hey, do I get penalty? Tell me the penalties. Give me that information. They will provide you an email. So read through that. So there are most mortgages, you can always get a conventional mortgage with no penalty on prepayments. That is means if you do a principal payment, you can do anytime principal payment. Let's say you bought a house for 300K and you took a loan for 250K and you paid 50K down, and over time you got like 250K and you want to close it. You can still make a principal payment and you can close it. So that should not do any penalty on you. So most of them, read it carefully. So pick something that does not have a penalty. And let's say you bought a home, within a year you want to close it, you should be able to do it without paying anything extra. So next point is if you got everything settled down, make sure you close the loan in few years, maybe 5 years. That's the max because even then the 5 years is very you would have probably paid like a lot of interest in that first 5 years. So you try to shoot as hard as possible to make a principal payment and bring down your interest. That's what I would say because the first 5 to 10 years is what the mortgage lenders would take a lot of interest. Probably, I would say if you take a 30 years mortgage, the first 10 years are crucial time for them because that's the major chunk will go to the interest and very less will go to the principal. So, and then another point is this is my opinion, but it's a general opinion as well. Avoid buying home that has high HOA, homeowner association. Let's say you're buying a home inside a community, for any reason, right? It could be a community can be looks great and they are like safe or whatever that is, and looks good and maintenance are good, no? You have a nice neighbors. So if you want to go in that route, pick something that has a reasonable HOA, because HOA can go up on a yearly basis. Keep that in mind. And if you buy a home which has a HOA and it has amenities like swimming pool, basketball, kids play area, walking park, there's X, Y, Z, anything you have it, like lake, ponds, everything is expense. So you need to clean the lake and yeah, maintain this on a monthly basis. You have to pay money, and then yearly basis they will get reviewed, and the price will go up as your salary goes up on a yearly basis. Same like that, expenses go up on inflation, and so do the HOA fees does. And if you happen to live in Florida, yes, you have something called CDD. Not all the properties has CDD, but most of them has HOA and CDD. CDD stands for Community Development District fee. So try to avoid buying a property which has CDD. You can still have buy a home with no HOA, no CDD. That's like buying it outside of community, but you can also want to buy, if you think that you want to buy a home in a community, you can still buy homes which does not have a CDD. So you can read more about CDD, or maybe I can cover a little bit on that in a separate topic, but that is mostly applicable in Florida. But other places, HOA is what it is. So it's just the different terms used for different things, and end of the day, you would be paying for everything. And let's say you want to, you still want a swimming pool and all this, things, but you can buy a home which has public park nearby, or public lakes. You can still buy a home nearby which has a public park play area, which is managed by the county, and then lake, which is also managed by the county. Because if you buy a property which has all these things inside your community and also outside, you will be still paying for both, because your community will be charging you on through HOA, and your county will still be charging you on your tax. So you will be end up paying both. So that's like a no-brainer. So pick a place where it has a public park, play area, lakes, and everything which has been covered and maintained by the county, and then you don't have to end up having them in your community. So that way you could save money there. So it's like paying double tax on maintenance. So avoid that. And some people will convince you to buy a home which has like home in a community which has a pool, fitness center and all this stuff, right? That's all. Just simply say no to them. Means like, don't buy in that places. Just my opinion, because you can always sign up for sports fitness like 24 Fitness or LA Fitness. You can always do that, and then they have swimming pool, they have all the services, they have towel service, and everything is there. You can use for your entire family, and you can charge them against your health insurance like HSA or something. You can use the HSA card. So altogether, you don't need to be tied up for your lifetime on a HOA overhead. So the advantage of this, the sports fitness club, if you decide to leave, or you don't want to do it anymore, you can just sign out. You can sign up for 6 months and a year, or you can sign up for all year. So it's all depends, but you cannot do that in a HOA which has all these amenities, or a CDD as well. So make something smart decisions, see your money goes in every direction. No, nothing is free, keep in mind. And the last one is pick a good realtor who you can rely on. Maybe you can take some reference from your friends, who bought home already. Talk to them and try to understand the pros and cons, and hear about all the cons, the negativeness, because positives are good always, the negative are the problem. So you have to keep in mind. So in this case, who can help you, or who you can trust, you get, just it's like you're hiring a realtor. And there are many realtor who help. on closing means the realtor do get like 4%. If you buy a new home, probably they get 3 to 4% commission. Or if you buy a used home, probably they get 2% or 3% commission. It depends on the transaction. So there are realtor who help in closing, because when you close your home, you would end up paying some closing cost. So the realtor who I used to work with, most of them, um, with reference, they do help on closing costs. Let's say if your closing cost is 15,000, they might chip in some 5,000 or 10,000 to offset your closing numbers. Still, they get the money, but they would help you in some cases because it's a win-win for you and also for a realtor. So try that. If something works out, it's good for both of you. Purchase the home that is not more than 250% of your annual income. So the price of your home should not be 250 times of your annual income, right? So let's say you make 200K a year. So the best thing you can do is buy a home for 500K, the max, like a half a million, a little bit here or there. So that is the best number so that you can afford and you can make things possible. So that's just like a safer place to land. So the next thing is some tips. Do your own research. That's what I was talking about, right? Talk to many realtors and your friends. Don't blindly trust any brokers, agents, right? They all try to sell you. So sales agents, the realtors, and everybody try to sell things. That talk to people, talk to your friends, talk to more than one person, try to pick different person or work on different things so that will make your own decision that align with your needs and goals. Don't go with others' preference. You pick your own preference. You drive your decisions. Do not let someone to drive yours, right? So do your own research and go with that. So timing is key here. Next point. So avoid buying home during unfavorable market conditions. There are some conditions, market conditions, such as high interest rate or a period of high inflation. These factors can significantly impact the cost of home ownership and your ability to secure a favorable finance option, all kinds of things, mortgage, etc. And even some insurance and all this stuff also sometimes tangled with all this stuff. So look for timing where it is at least a reasonable, or there are more homes which is available in that area, so you can actually put, you can play with the offer. Then third point is, I told this before, but talk to your friends who already own a home. Talk to someone who's already owned a home in that like 2, 3 years or maybe recently bought. Talk to everyone as possible. Ask your questions. Do your research. Put all your points in a paper. Ask the same question to 10 different person. The 10 different person would give you 10 different dimensions. Do that. And the next point would be consider the proximity to a good school nearby. So that's one factor that most homes will have some kind of a good value in general. If you have a park, a good big playground, and there is a amenities around like a splash pads or a play area, lakes, schools, and all these things. But in this, when I was talking about school, you should, if you have a good school district nearby, you are in no, that's something always good. At least if you don't have to necessarily be like very close to them, but you can still be in a commutable distance. Maybe like you can go work in 10 minutes, maybe, or 15 minutes, like 15 miles, 10 miles difference, like something reasonable. If you're driving to work and you can drop your kid on the way and pick it up, something is doable, then pick something in those areas if you have a good schools in that area. Noise consideration. So people who live in downtown or on the main area, it's so traffic and they always have noise. So try to pick something which is little away from your main area, which is always expensive most of the time, very congested. Try to avoid those noise, so you at least pick something peaceful And maybe if you go a little away, you might find a home which is a bit cheaper when compared to living in a main downtown area or maybe crowded area, because it gives you a peace at the same time. Your money also has a value. It's like you will pay less for something. Sometimes you can just commute. The last point will be condo versus single family home or townhome, right? So in this case, I'm just comparing only condo and single family because townhome is okay, it depends on location. They are not really bad. But when you're going with condo and versus single family home, I would still prefer single family home because condos are actually it's like just apartment units, right? So they have they have pros. So condos do offer certain advantage like low maintenance, responsibility, and access to shared amenities. And you still pay for a HOA fee. Like the HOA fee have be like $500 a month, which is a heavy big numbers. You won't really have that much of maintenance when you have your own single family home. Probably if it's a new home, you won't have that much of maintenance. You don't have to pay that much 500, $600 for HOA for maintenance. But in condo, that's how it works. You still belongs to a homeowner association or condo association. You would be still paying a lot of money on maintenance and all this stuff. Even though it's considered as low maintenance, but still you will have a HOA insurance, community to run the amenities and all the stuff. And then when you try to sell the condo, you might have a tough time selling it because the pathways are narrow. You cannot move your things up and down. It can be really tough. But single family homes are generally offer more privacy and potential for no, over time it has a good appraisal, and it's single family home. You have a backyard. You can do things in your backyard. So you can't do the same thing in condo. So try to avoid condos and just go for at least single family home. If you think that single family homes are really expensive in that area, but you have a job and you have to commute, but I would pick a townhome in that case because that will have, it's like coming between a condo and a single family home. Like you would still have a backyard, you would still have no, a home which is attached, the wall will be shared and roof will be still maintained, exterior is maintained by the association. They will not be that crazy expensive, and some places do, yeah, because if you pick a golf course community, they have a lot of expensive things happening there. So just pick your game accordingly. And the last thing which I would like to cover is ongoing cost. So buying a home or owning a home is not something free. Most people think that it's an investment. Not necessarily, if you ask me. It's the same like a utility fee. Like you pay for your utilities, right? You go for let's say electricity. You pick electricity and use your electricity, and you pay for electricity. You won't call necessarily electricity as an investment, even though you own your fan, you own your TV, whatever, whatnot, computer. But electricity, without electricity, it's just useless, right? So, but that fee you have to pay. Same like that, you have everything, you have money in the bank, you're rich, but you still have to live somewhere. So, to live inside the home, you have to pay something. So, because we live in a modern lifestyle, so it comes with a cost. It's not going to be free. So, in that case, you have a mortgage payment because you bought a home on a loan. If you bought by cash, yes, don't worry about it because you don't have to pay that. And property tax, it's not free because you would probably pay a minimum of somewhere between 6,000 to 12,000 or 20,000. It depends on your property appraised value during the time you bought a home. So that's there. So you can't avoid that. Homeowners insurance, that's something which always goes up. So you would probably have to have some $2,000 or $3,000 in hand on a year, depends on the house. New house will have less insurance premium. Older homes will have more insurance premium. So because things tend to break, older homes, so that plays a thing. And also if the homes are renovated, insurance companies do send an inspector to check. If the inspector said yes, this house is renovated, it's brand new, chances are it's things are brand new, chances are your interest can, I mean, your insurance do can come little lower, otherwise it'll be high. And maintenance and repair cost, like again I said, new homes will have less maintenance. New can be anything 1 to 5 years. Maintenance can be low, but if the homes are like 20 years old, your things are still old, like your kitchen appliances and air conditioning, they can break anytime. Even a brand new appliance can break anytime. But just a peace of mind between the very old home versus a new home appliances. And then utility bill, like the old appliances do tend to take more energy than the new appliances that are energy efficient. So you have a water, sewer, trash, electricity, internet, whatnot, right? That's all comes under utility bill. And on the top, homeowner association fee or a CDD fee or both, you would end up paying that as a chunk. And then on the top, if you end up having a mortgage insurance, as I told you, if you're not paying a 20% down payment, you would end up paying a mortgage insurance. So that can be $200 on the top. So if you calculate all these things, probably if you come to the number which is below your rent and the square footage of the rent you're comparing and the location, all this stuff, you have to come up with this number. So if both the numbers matches and you want to take for the same price, you are getting a big house with a good square footage and a single family home, go buy, have a joyful life. But if you're having getting the same thing or little less footage, but you are paying the same amount for rent, but you are living next to your work, probably that is much easier. So no, you know what I'm saying? So end of like probably in few years, your home might appreciate or it can depreciate. We don't know that because it's totally based on the game on the market. So most likely the price will just even, means like when you sell or buy a home, you still have to pay. So buying and selling always comes with registration fee, closing charges, taxes, no, all kinds of fees like realtor commissions and all the stuff will be there. So buying and selling is not something easy. You could do that in OfferPad or something like that, but even there, they won't give you an awesome offer. Maybe you can go with companies like Open Door or something, but their offers are very low. It's like taking your car to a CarMax and telling them to buy your car. Probably they will rate your car much cheaper than what they usually sell the car. They need something by, since they are putting money. If your car values are like $15,000, they would probably take your car for $12,000 or even $10,000, because once they take it from you, immediately they do all the tinkering work and put it on the sale for $20,000. So they will try to make money out of you. So think all this thing and then decide if it really worth. Is this all hassle really worth on H1B visa? If you're a person moving every 6 months, don't even think about buying a home. Simple, rent it. If your rent is cheaper, you're paying cheap rent, which is cheaper than the property tax, I would simply recommend stay rented. You're totally done. You don't need to worry about anything. Rent it, enjoy, save your money, invest somewhere else, or put it in your back in your country. Keep moving, enjoy different states, live your life. It's just totally a different perspective. So, guys, the answer to the question is yes, you can buy home on H1B visa if you manage to cover all these things I have discussed in this. So when you buy a home, make sure you do inspection, check your home properly, and buy the good home. So that way you can avoid maintenance or repair issues. So probably you can hire a good inspector to inspect your home. Just something this came in my mind. That's all. Thank you. Thanks for watching this video. I hope this information could have helped you a little bit to make a decision. If you like, please give me a thumbs up and subscribe to my channel. Thank you.